Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN Sunday. I'll be joined today by members of the media, financial services, and academia as we analyze all the news this week in retirement markets, technology, personal finance, so much more. We've got another great show for you this week, so sit back, relax, and enjoy this episode of BRN Sunday. Well, let's kick things off with a look at markets and cryptocurrency. Joining me on the line, Kevin Kelly. He's the co-founder of Delphi Digital. Hey, Kevin. How you doing? Welcome back to the program.
Thanks for having me, Jeff. Good to be back.
Yeah,
Crazy week. A lot of madness.
Yeah, a lot of madness, and I want to kind of stay away from the election because
I'm right there with you.
as far as we can tell, we're recording this at 9 a.m. on a Friday. We don't yet know if we have a winner or what. So let's talk about markets, because leading up to this election, we had a lot of market volatility within the past couple of weeks. Now we've got the markets soaring. I haven't looked at the market hasn't opened as of now we're talking. And then, I wanted to get your thoughts on that, and then also get your thoughts on the Fed.
Yeah, no, 100%. So to your point, yeah, you saw really kind of big surge or spike in volatility right towards the end of October. So about a week ago, some of that remained pretty elevated heading all the way up until basically election night. And then since then, certain indicators like the VIX or the VVIX or the VIX of the VIX, those types of volatility indicators have certainly come down, and that's given a huge boost, I think, to asset prices generally, right? Because we talked about markets hate uncertainty. Not to say that we have, to your earlier point in the intro, that we've gotten anywhere close to a certain outcome, and I think we can both agree this is going to drag on for weeks, if not months, but some type of clarity around what the potential future direction is, that suppression of uncertainty has certainly helped boost markets, at least in the short term. Where I get concerned, and again, we've talked a bit about this before, is regardless of who takes office, and to be honest, regardless of who kind of ends up in the Senate, we still have we're still facing a global pandemic. You're watching COVID cases surge once again here in the U.S., and we still don't have any fiscal stimulus to really hang our hat on to say that we're going to be able to pull a large part of the economy and drag a large part of the economy out of what is, one of the worst economic downturns it's really not even a downturn, an economic crisis that we've seen, at least in this generation. So for me, yes, I think a lot of people have been obviously caught up this week, and I guess rightfully so with the election, but there's a lot of really, really big headwinds that we face still that still remain unsolved. So for me, a lot of what we're watching going into year end is, around volatility. Well, volatility can continue to remain elevated. Asset prices here tend to do pretty well in the fourth quarter, as you have people kind of heading into the holidays. But again, to say that 2020 has been anything but conventional is obviously, we've lived through that, and so I kind of say all bets are off in terms of what can happen between here and let's call it year end.
Yeah, I mean, one of the things that looks like we're going to have is divided government in some way, and narrow margins in both the House and the Senate. So regardless of who the president, it seems like the markets have responded very positively. I don't even know if that's the right word, but that the uptick, the significant growth in the markets this week, or positivity in the markets this week, is certainly potentially indicative of that, wouldn't you think?
Yeah, no, absolutely. And historically, periods in which, not to say every period we can classify or categorize as this, but historically, on average, when you do have political gridlock, that tends to actually be pretty good for asset prices, and especially risk assets like stocks, where we have to kind of hang a big asterisk on this instance versus prior, is what we're facing, what I mentioned, just previously, what we're facing heading into year end and then really into the beginning of 2021 is unlike, something that we've seen in a very, very long time. So it's not to say that this time is wildly different, but this time certainly is not going to, at least in my opinion, have the same potential effects on the market as you would expect in a period in which you have at least the economy chugging along, you're not facing a global pandemic, and you have political gridlock.
Yeah. Now let's talk about the Federal Reserve, because I believe they came out earlier in the week, or yesterday. So we're recording this on Friday. Thursday. I think they came out and basically said they're going to keep things status quo. What do you take from that? I mean, lower for longer, uh,
Yeah,
for
I
much
think
longer, apparently.
they like a lot of people, I think, decided to sit on the sidelines for this most recent meeting. They knew they weren't going to. I mean, raising rates is absolutely out of the question, obviously, given what we're facing.
Yeah.
Stimulus has to continue to come, and the asset purchases, those are going to continue. And what was interesting is, by and large, when a lot of the commentary from Powell was very kind of telegraphed and expected, what I do think is interesting is starting to try and defend against this idea of kind of monetary financed fiscal policy, right, which we've referred to as kind of debt monetization, where you have the Treasury coming out, issuing more debt to basically be able to fund fiscal spending, and that debt is obviously being absorbed indirectly, or second order effects being absorbed by the Federal Reserve. So it is, in a sense, kind of this debt monetization idea. And to be honest with you, I think, you talk to a lot of market participants, you talk to a lot of people. The faith in institutions within the U.S., whether that's on kind of the public side and everything that's going on in the political landscape, or what's going on with the Federal Reserve, a lot of the confidence and the trust in those types of institutions is really starting to wane. So you have people on both sides now saying, yes, the Fed still has a lot of ammo, it's going to be okay, and then you have people on the other side saying the Fed's basically out of bullets because what they're doing simply isn't working. And there's reasons behind that it's probably a topic for another discussion, because there are a number of reasons why I kind of sit in the latter camp. But either way, one of the big things that the Fed has always been is a signaler or communicator of what future policy should be, and through by conveying what future policy should be, or what they think it can be, or what they set out for it to be, that can actually trickle into markets and affect things like consumer sentiment, consumer confidence, obviously interest rates, inflation expectations, all of that. So again, it's as much, I think, at this point for the Fed about coming out and having a strong conviction in what they're saying and what they're telling people they're going to be doing to try and hit that 2% inflation target, as much as what they're actually doing or the actions that they're taking to try and kind of spark that.
So, Kevin, let's talk about cryptocurrency now, because in the run up to last week, we saw Bitcoin really jump and appreciate in price. How about now? How is it? What is going on not only with Bitcoin but with crypto?
Yeah, so Bitcoin has definitely jumped right back into the limelight after this summer. We had a pretty sizable run up in DeFi, decentralized finance sector that we've talked about before on your
Hmm.
show. Recently, Bitcoin coming right back into the limelight. A lot of that being, you now have, again, shaky confidence and uncertainty in what's going to happen here in the U.S. Part of that also, and I put out a piece last week about how this time really does feel a bit different from prior kind of rallies in Bitcoin, strong surges in Bitcoin, is that the typical indicators you would see, right? We talked about volatility spiking right here last week. Bitcoin essentially ignored that. And as we've talked about historically, high volatility periods tend to be periods in which you see a pullback within Bitcoin. It kind of sells off with stocks, with other risk assets. And Bitcoin basically flipped the playbook on its head and actually started to take off with volatility, right? And so that to me was a huge signal that the kind of historical relationship that Bitcoin has had with some of these risk assets, it might start to be considered a really true uncorrelated, diversifiable and investable asset across traditional investors, because the uncorrelated narrative really starts to take hold when Bitcoin goes one way and the rest of the market kind of goes the other, right? And you saw that
Hmm.
again. The market has bounced back, as of the last few days in this week, but you really kind of saw Bitcoin separate itself from the rest of the pack. And I think by nature that also started to increase some of the momentum, and some people kind of FOMOing in, as they say, to Bitcoin, because they certainly didn't want to be left out of this rally, because anybody who was around in 2017 remembers Bitcoin hit 15,000, and then within 9 or 10 days it was trading up near 20.
Yeah.
So it moved very, very quickly, and so I think a lot of people certainly thought that could be similar this time around. But what we've seen the last 24 hours or so is you're starting to see some of the rest of the crypto market come back a bit. You're starting to see a reallocation out of Bitcoin into some of those alternative crypto asset names. But by and large, I mean, again, the setup here, Unfortunately, fortunately or unfortunately, depending on which side of the coin you sit on, the setup for, this industry and this emerging asset class, this emerging sector, however you want to view it, to be honest, it's never been more conducive for it to really kind of take off.
Yeah. So what does this mean, Kevin, in terms of the institutional interest in Bitcoin? Because obviously, if you stuck with Bitcoin through kind of the down times, uh, you've been rewarded, right? But what does this mean for Bitcoin interest, or not Bitcoin interest? I'm talking about cryptocurrency interest. Forget just Bitcoin.
Yeah, I would say, I mean, for me, I think a lot of the institutional interest is always going to start at the top of the funnel, which is Bitcoin, right? And rightfully so. I mean, Bitcoin is the OG crypto asset, you could say. So what we've seen actually in the last couple of weeks or so, especially you've seen Bitcoin really take off, is we've seen genuine interest from not only just your institutions, but RIAs, financial advisors, people who are trying to get a better grasp on what's going on with this, because time and again, people have come out and obviously been against what Bitcoin stands for, thinking it's a fraud, thinking they put a whole bunch of labels on it, and the thing just will not die, and it continues to strengthen. And I think we're starting to get to a point where people have to take a second look at it and go, you know, the crowd is starting to change their narrative, and I think once that happens, that's going to be a huge tailwind for Bitcoin and the rest of the crypto asset space, because it goes from being hated to being kind of misunderstood and challenging and being disruptive. So people still pile on that hatred. And now it's starting to really kind of emerge as a truly diversified and investable, I think investable is the key word there, investable asset class. As it starts to scale, as it starts to become bigger, you're going to have this potential reflexive move, because big pension funds can't get into it now because it's too small and it's not liquid enough. But if you start to build up the size of this market, then you can have more large capital allocators come in and actually put on position sizes that would move the needle for them potentially. And so that is the point in which I think you start to see a really reflexive move, but it's going to come in stages, right?
Yeah, I think you're right. I think it's going to take some. It's going to take. It's not one event that moves these things. I think it's about acclimating and understanding and seeing what the trends are and seeing how this could potentially fit in your portfolio. Well, Kevin, great conversation. Really enjoyed it a lot. Wishing you the best for a great rest of the weekend, and we'll talk to you again very soon.
Thanks, Jeff. Appreciate it, man. Bye-bye. Talk soon.
Welcome back. Now time to take a look at, or listen to at least, the top social media trends. And joining us now to discuss this and a heck of a lot more, Devin Banerjee, a senior financial services editor for LinkedIn. He's also the editor of the This Week in Finance newsletter, which you can find on the LinkedIn platform. Devin, welcome back to the program this morning.
Thanks a lot, Jeff. Happy Friday.
Yeah, it couldn't come too soon in my book. Great to talk with you as always, and I always like to acknowledge, you do double duty. We get to talk to you on a Thursday, and we also talk to you on Friday, Thursday for Friday show, and then Friday for Sunday show. So really appreciate you spending time with us out of your busy schedule. So what's top of mind this week as you kind of scour the platform?
Yeah, absolutely, Jeff. And thanks for the great conversation for the network that came out on Friday. I would encourage people to just take a look at that, because I'm going to skip over some of those stories, but including probably the biggest story in the financial world this week, which was the suspension of the world's largest IPO, which would be Ant Group, the fintech company out of China. So take a look at that conversation that I had with Jeff. A lot of moving parts there and a lot of interesting implications. Some new news this morning, and again, we're speaking on Friday. Of course, it's the first Friday of the month, which means the monthly jobs report is out for the month of October. On the network, you and I spoke based on the ADP data, which reflects private payrolls, but this report from the Bureau of Labor Statistics from the government gives us a much fuller picture of the labor market. So employers added about 638,000 jobs last month. It's, of course, the sixth straight month of gains. The unemployment rate, good news, fell a full percentage point to 6.9% from 7.9% a month earlier. a good point that you actually made, Jeff, a couple of weeks ago, very prescient, was that one of the softer
Sorry, that
one of
just
the softer
me
spots.
impression doesn't come to mind. I'm sorry, Devin, go ahead.
One of the softer spots, unfortunately, was actually in the public sector. We did see that a bit weaker, especially as I should mention, the layoffs or the release of all of the census workers that occurred, but also some softness in education at the state and local level. Those public employees, unfortunately. So what does this mean, and what does this mean going forward? Look, as I said, it was the sixth straight month of gains, but the rate of gains, of job growth, has slowed each month since June. Also, this report is the one that came out today, is mainly derived from surveys in mid-October, and we've seen some data weaken since mid-October. We've also seen, of course, the recent rise in virus infections, implying another wave, you might call it, or at least an exacerbation of the pandemic. And then, of course, we have coming up in December and the end of the year, a lot of the expiration of benefits, unemployment insurance benefits, other jobless benefits, as well as the expiration on, depending on your lender, but there are several looming expirations of the eviction moratoriums and the mortgage moratoriums and other borrower-lender relations there.
Yep.
So obviously good news today just in the numbers, and we should celebrate that, but we should keep a close eye on this going forward.
Yeah, it seems to me, Devin, I mean, we can tout these numbers, their improvements, but those improvements were probably gleaned from the benefits that were put forth by the Triple P, Paycheck Protection Program, and also the stimulus that was done. And look, candidly, I think people are waiting. We're waiting, and businesses are waiting to hire before they see what's going to transpire.
Yeah, that's absolutely right. And looking at some of our data out of LinkedIn, it tells a similar story, but of course we drill down into some certain industries and look at the hiring rates among those. So some of the brighter spots, and of course many of these are coming off of a low base, but among the industries, we are seeing a nice recovery, not up to pre-pandemic levels, but a recovery in hiring in real estate, construction, a little bit of retail as we approach the holiday season, transportation and logistics, and manufacturing as well. Where we continue to see underperformance in our LinkedIn hiring rate is the arts, recreation and travel, agriculture, and software, actually. And then just drilling geographically as well. Interestingly, we see the Sun Belt states, as well as some specific southern cities and states, climbing closer to their recovery levels. The 5 cities that we see closest to recovery, meaning back to the hiring rate that we saw pre-pandemic, are Phoenix, Atlanta, Dallas, Miami, and Chicago. So some interesting data there, some case for optimism for folks who may be listening around those areas.
Yeah, absolutely, Devin. And George Anders, your colleague, does a lot of data-driven. That comes out every 2 weeks, right? The LinkedIn
right.
snapshot, the workforce survey, not confidence survey, but the snapshot that's done every 2 weeks.
Yep. Yeah, that's absolutely right. So that was some data out of that most recent edition of our WCI Workforce Confidence Index. And so some more data out of there, just because you mentioned it this week. George actually did another deep dive into veterans hiring as we approach Veterans Day here in the United States. So we looked through our data and all of our LinkedIn members who classify as veterans, and look at the 10 cities in the U.S. where they are most strongly represented in senior level leadership positions in the corporate world. So the 10 cities that have the highest density of veterans in corporate leadership positions. So those include, and many of these areas are, of course, are near military facilities and bases, but some others are not. Norfolk, Virginia, Colorado Springs, Huntsville, Alabama, San Antonio, Texas, Tucson, Arizona, Jacksonville. I won't go through the whole list, but you can find that list on George's profile, as well as some really good reporting, some interviews he did with veterans. Of course, always an important topic around Veterans Day, but I think throughout the year, which is just the skill set, the unique skill set that veterans can bring to the corporate world. And we're starting to see that. As I said, some of these areas are near, military facilities and bases where there's a strong military culture, but we're starting to see these strong cities spread across the country as well.
Yeah, well, nice to see, right? I mean, you have these veterans, and they have tremendous skills that they've gotten in the military. I think we've talked to. We actually had a former, a current Navy service person, and we were talking to him about transition. Not that he was thinking about leaving, but what is he going to do in the future? You don't. A lot of people do not serve in the military until they retire. They may transition out of 20 years. They get maximum benefit if they're part of the pension, and then they go to do something different. And it's nice to see finally that we've got this road where people can come out of the military and find a job in, even a senior job that where their skills apply or something that they really want to do. And to me, Devin, it almost feels like the retirement conversation. We talk about retirement. You retire at age 65, but then you go on, you don't just sit in a rocking chair and with the kids on the lap, grandkids on the lap. You go do something else, something that you're passionate about. And so it's nice to see that there's a funnel, for lack of a better term, to help people transition back into the citizen workforce.
Yeah, and it reflects some data that you and I spoke about in recent weeks. Well, that as it related to financial services professionals who have found themselves unemployed right now. But it's this idea that pivoting your role or pivoting your industry is really one of the most popular strategies that we see people consider when they run into a roadblock in their career or they find themselves unemployed. And to be able to pivot, you really have to leverage a broader skill set, and you have to apply skills that you've honed in your existing industry and translate those into another area. And so just very, very important to reinforce the value of skilling, reskilling, continual education throughout your career.
Yeah, really, really, I'll say that was prescient. That was you used that word, Devin, earlier. I think your comments were very prescient, and it's nice to see employers doing something with veterans. And also, the other thing I wanted to mention, and I'm not sure if anything came out of the index that George does, but a lot of older workers, people not looking to retire, maybe got pushed out of an existing job, looking to kind of reskill and find something else at a later stage in their career, in their lives, and there seems to be more and more opportunities for these folks as well.
Yeah, absolutely, and certainly as it relates to the retirement conversation, there are more of those, seeking to work longer than just age 64, 65, and so yes, they are reskilling, and employers are finding value in those folks. It is important to recognize that ageism, unfortunately, does exist in many places, and we have some really important conversations on that occurring on LinkedIn all the time about how to combat ageism, how to put your best foot forward in application processes and stuff like that. But yes, those folks certainly have very, very, very valuable skills.
Well, Devin, always a pleasure. Lots of good information on that LinkedIn platform. Over 700 million people around the globe and growing. Devin, always great to talk with you. Thanks for breaking it down with us, and enjoy the rest of your weekend, and we'll talk to you again next week.
Sounds good, Jeff. Take care.
Bye. Welcome back. Now, time to talk tech. Joining us on the line is lead advisor and executive producer for 7 Investing, Mr. Daniel Klein. Hey, Dan, welcome back to the program.
Oh, hey there, Jeff. Thanks for having me.
Long time no talk. No, I'm just kidding. Yeah, we love having you on, and twice a week we get you on the podcast to kind of analyze the news, and then we always have you on every Tuesday for our big tech segment. So really appreciate your analysis. So Dan, I know you wanted to talk about the Apple iPhone 12 Pro. I think you were testing that out.
Yeah, so Jeff, a couple of days ago, I get a notification from my building that I had a package. So I checked to see like, oh, did I order something from Amazon? And I went, no, everything I've ordered from Amazon's been delivered. And then it dawned in my brain. I went, oh my God, it's my iPhone. It arrived about 4 or 5 days before it was supposed to. And, for me, this is Christmas morning. Like, I get a new one every year. I'm very excited about it. And when I get it, I'm always a mix of disappointed / also excited. So I open it up. I set it up pretty easily. You and I are both with T-Mobile. I've learned the process over the years of setting it up. It's not as easy as it should be. They also didn't send any documentation, which normally they
That's
do. So
helpful.
I thought that was a little strange, but I remembered it from about a year ago. And I got the phone, and Jeff, it's really pretty, and I'll never see it again because I put it in a case. I'm holding it up. Of course, we're doing a podcast. Um, and,
Sorry.
and all the amazing things it does so far don't seem that different. I took some pictures at night of my cats, and they turned out okay. They didn't seem all that different. I will say the MagSafe connection seems like it's going to be really, really useful. So I bought a MagSafe charger.
Hmm.
And it does. You just kind of put it near it, and it kind of snaps into place. It gets rid of that, like, oh, I don't know if I'm on the thing. Some of the accessories there, like the MagSafe wallets and things you can put like just on your phone, those seem really enticing. That being said, I don't want to buy them sight unseen on Amazon, especially because they're not Apple products. They're generally third-party products. I'm looking forward to when I can go to an Apple store and these are in the store and I can pick from, chargers and gadgets and little add-ons and things like that. The other thing is, the big sell was LiDAR. I have no idea where the LiDAR is, what it does, if it benefits me in any way. And I'll say I've been a Max customer previously,
Hmm.
but I got the Pro, and it's about the same size viewable screen as the old Max was. So it's big enough, and I'm not sure I needed the bigger one given how much extra real estate it takes up in your pocket. So overall, I'm excited, and you should be too, because I know you're making the switch as well.
I am, and I wanted to talk to you a little bit about the economics, Dan, and wonder if you could just share some of that. What does it mean in addition on your T-Mobile account or your Verizon account? There's going to be, if you choose to pay for it outright, that you just pay a total amount. But usually people buy it over a 24-month period, and it's some fee. But tell us some of the economics here, Dan, that we need to be thinking about.
Yeah, it depends how you finance it and what the deal is. A lot of companies are offering really strong deals, and I haven't looked into what they are, but I know the Verizon commercial is will treat you like maybe it's AT&T will treat you like you're a new customer even if you're not. So
Mm.
there is a lot of subsidies on these phones. I know that in my case, I traded in an iPhone 11 Pro Max. They still haven't sent me the paperwork to mail that back to them, and they did the value and they went, hey, your phone's worth like $130 more than you owe on it, so once you return this, we'll actually credit you that balance. And then previously I had to actually pay a deposit on the phone because I kept getting a more expensive phone. In this case, I got a less expensive phone. So for returning my phone, I get some credit there, and I pay, I don't know, $40 or something on my bill. It's not really something I factor in because I kind of always have a phone I'm paying off. For most people, I would argue that this is not necessary. If you have an iPhone 10 or 11, you can probably wait a year because the big selling point here is 5G. And I'll tell you, Jeff, I mean, I haven't been outside of West Palm Beach since I got the phone, but I have not seen a 5G or even a 4G connection. I'm going to assume it will pop up and say 5G in the upper right hand corner. So that is going to be a draw. It is going to be better performance, but it's also going to be a while before it's rolled out. Now, T-Mobile is leading the way in terms of rolling out, like, let's call it 5G Lite, where you'll
Hmm.
have better performance. So maybe in the next few months, I'll experience that. Certainly, as I start to travel, I'm sure it'll pop up in cases. But for the average person, the smart financial move is actually holding on to your phone until it's no longer useful to you.
Dan, what about insurances or having a case? These are some other economics that it's not just the phone. Some people buy insurance to replace the broken. If you break your what do you call it? The screen. What about that? How did that factor in some of your decision making?
Yeah, so I put mine in a case, even though, like, theoretically, they're somewhat close to indestructible now, but it's very slippery when not in a case. I also ordered a battery case that's a bit clunky, but if I go to a theme park or something, it's a lot nicer to have the battery case than to have to carry along an extra battery with you, especially with the gate procedures. We have to go through security security and the like, and empty your pockets and that stuff. In terms of insurance, yeah, if you're buying $1,000 phone, you should look into the cheapest option for insurance. I actually have a legacy program on T-Mobile called Jump, where it's about upgrades, it's about insurance. I think it's like $9.99 a month. And my son has twice. He has a lesser iPhone. He has an iPhone 6. Maybe it's a 7. He's broken the screen twice. And the first time it was a $50 copay. The second time, because it happened so quickly after, I think it was 100. But that's really all that happened. Is they sent me a phone, I sent his phone back. It was done. Like it worked really easily. I've never broken my phone, but I do pay for the insurance. It's also loss insurance. So if you like leave it in an Uber and never see it again, they will replace your phone. So if you're buying something that expensive, now there are, and I can't say I recommend this. You got to do your homework. There are insurance options that are not through your phone provider, and generally those can be just as good or cheaper. With Apple, there's also Apple Care, which can be a good value. So this is one where you're going to want to check the consumer reports. You're really going to want to do your homework because it's very personal. If you have an iPhone 7S, well, maybe you can drop the insurance on it because you've already paid for it. It's past its life. If you drop it and you break it, you're going to be okay. You were going to replace it anyway. But if you're buying a newer phone or even a brand new iPhone 12 Pro like you and I did, yeah, you're going to want the insurance.
Overall, good value. I mean, I know it's only been what you said, a week or a couple of days since you've had it, but just in your sense, good value for people who are out there listening. If you need to upgrade your phone, now may be the time. But from a value perspective, what do you think?
So the deals are going to be really strong right now, and it's possible the deals will continue past the holiday season, but I doubt it. So again, don't replace a phone that still has life, that you're still paying for. But if you're someone who needs the latest, look, the camera is better. The camera on the Pro Max is even better than this one. So if you're someone who shoots a lot of photos, that might be valuable. But if you're on an iPhone 8, if you're on an iPhone, an older model iPhone, and you use your phone a ton, I think it's a good investment in productivity in yourself. Even my iPhone 11, I was finding was hanging up on certain things and was getting sort of a little bit slow and sluggish. That's by design. It's unfortunate. I don't love that Apple does that. But generally, you can hold your phone for 2 to 3 years. If you've held it for more than that, it's probably time to upgrade. The other thing you could do, and it's something we tend to do in my house, is you can downshift your phone in the family. So I know, like, my wife has like an iPhone, maybe it's an 8S that used to be mine, and at some point, probably because my son's phone is older, he'll get that one, and my wife, she probably won't want the newest iPhone. She'll probably be fine with like a 10 or an 11. So we tend to move things around. I'm the one who cares the most, so I always have the latest. And yeah, for me, it's a bit of a status symbol, which again is silly because I put it in a plain black case and you would have no idea what it is.
Dan, last question. In terms of fitting into you've got the Apple ecosystem. What are some of the other competitors to this phone? I know Samsung is usually a close competitor to Apple, but what are some of the competitors that people should maybe take a look at when they're weighing whether to get this new phone versus some of the others?
Yeah, it's a little trickier with, say, Samsung or LG because they make a much wider range of phones. So the comparison is really the top tier Samsung, the top tier LG phone, the Google Pixel, the latest one. And again, if you're comfortable with Android, you might want to consider those. And in general, if you're comfortable with Android, you might be able to find a very high feature, very high functioning phone that's significantly cheaper. I don't particularly care for Android. I'm comfortable in the Apple ecosystem. I'm recording this call on my iMac. I own 2 Mac laptops. I'm generally, aside from my Amazon device and my Roku players, I am generally an Apple person. But if you're willing, you should, and I know it's a bad time to do this, but you should go to a Best Buy or someplace that's pretty agnostic in terms of showing you things and hold them and touch them. And again, I know that sounds horrible during a pandemic. Do it as safely as you possibly can, or read your CNET reviews, read your credible reviews and try to figure out what's important to you. Like, I really liked the Microsoft dual screen phone that's Android powered. That said, it's $1,400 and it's kind of a gimmick and I wouldn't buy it. I'll buy one when it's, $300 after it fails. But really it is personal preference, and you don't have to spend $1,000 on a phone.
Really good advice, Dan. Excellent analysis. Always appreciate your insight. And look, we get to see it twice a week because we're going to see it on the network on Tuesday. Until then, have a great rest of the week and weekend, and we'll talk to you soon.
I'll see you then.
Welcome back. Now, time to take a look at what's happening in Washington, D.C. and on Capitol Hill. And, well, this could be a more perfect time to talk to the Legal Eagles. David Levine, Kevin Walsh, both are principals with Groom Law Group. Gentlemen, welcome back to the program. How are you doing today?
I'm doing okay. I'm a little tired. I mean, it's been one of those weeks where, you have a lot of restless nights. I don't adjust well to daylight savings.
But yeah, there's nothing else going on. Thanks, Kevin.
Wait, Kevin, it doesn't feel like Groundhog Day to you at this point?
What, the pandemic just lingers and life working from home is just day in, day out? Are we talking about something else?
Yeah, you're right. There's been absolutely no news this week. As we sit here and record this, we don't have an election that's called, so we're going to do two versions for today, depending on what the outcome is. So, Kevin, I think if Joe Biden wins, we might see Secure 2.0 go through. But Kevin, I think if Donald Trump wins, we might see Secure 2.0 go through. I know we already talked about both. I know we talked about both of these outcomes. They're very different, and they're clearly bipartisan. What do you think? Do you think Secure 2.0, as we already talked about, might go through in either of my scenarios at this point?
So I think one of the really significant things about this election is, next year, assuming that the Senate and the House play out the way that it looks, where it looks like Republicans are going to keep the Senate, it looks like Democrats are going to keep the House. Our president, our unifier in chief for 2021. Likely will could have an opportunity with divided government to see Secure 2.0. It's a bill that seems to have support on both sides of the aisle, and our president, having been sworn in on January 20th, could be looking for a good bipartisan win. So I could see that happening next year, as a result of this election, if current trends stand.
Mm-hmm. That would make a lot of sense, Kevin. And if Joe Biden wins, we have, let's say Joe Biden has just won by the time this gets broadcast. Certainly, it'd be interesting to see who he's going to appoint.
Broadcast.
This is broadcast. We're recording this, everybody. Thursday.
Sunday.
Yeah, Sunday. That we're not going to have a winner, but hey, look, we can hope, guys. We can hope.
David, this is the full employment for lawyers election. I mean,
when have you become an election lawyer? Are you a poll watcher for both Biden and Trump at the same time? Are you double billing, Kevin?
I mean, David.
This is like the firm.
We all practice across different areas of law, and occasionally I dabble in election law.
Understood. And you dabble apparently for both Biden and Trump, depending on the outcome. Is that the right answer?
Well, I mean, it really depends on how close the election is.
Fair enough. That is what an essential legal answer, as everybody can tell from.
Let's pivot to cabinet. It sounded like you wanted to talk about the next head of the Labor Department.
The next head of the Labor Department. Well, if the president-elect is President Trump, that's a really good question. Who will it be? Do we have anybody in that role right now? Oh, we do. Secretary Scalia.
I can see Secretary Scalia staying on if there's a continuation of the Trump administration.
Yep.
Now, with a Biden administration, I think things could be very interesting because I think some of the speculation leading up to the election was that Biden could be pressured to have a more progressive cabinet. One of the things to keep in mind is that cabinet secretaries need to be confirmed by the Senate. And the reports that I've been seeing indicate that if Republicans hold the Senate, they may not go along with confirming a more progressive cabinet. So one of the names we'd heard bandied about was that Senator Sanders from Vermont could be the next Secretary of Labor. That could be the case in the Biden administration. But if Mitch McConnell is the Senate Majority Leader, typically it's easier to confirm, colleagues in the Senate than it is outsiders. But that could be a tougher confirmation process.
Well, it's interesting you say that, and I think a lot is to be determined. Like as of our recording right now, for instance, current Majority Leader McConnell has already been talking about stimulus, and he's like, maybe we need some money for state and local governments. So it's all fluid. I think one other topic, and Jeff, I know we could spend an hour.
This is fun. I'm just listening, having a lot of fun. Listening to you guys. This is a comedic relief, but also informative. So go ahead, David. I'm sorry.
No worries. Why don't we wrap up on EBSA today? We have Ms. Wilson acting as the Assistant Secretary at EBSA, and the question is, if President Trump is the president-elect, will she continue as acting? Because Kevin, to your point, we've had a lot of acting during this administration, and we could have a lot of acting during the Biden administration too. So maybe acting Assistant Secretary Wilson, maybe she stays in that job, maybe, who knows? But on the Democratic side, I know that there's lots of names thrown out there. It's probably too early because we're just making it up, I think, if we do it. But on the Democratic side, it would be interesting to see. Do we see a return to names from the past that have been either in leadership or in roles for like the Obama administration? Or do we see a name that's completely different? And part of this is, you look at like Senator Warren and her interest in our area and other people. The progressive push-pull is something I think is a really big discussion item because, as Kevin, as you pointed out, aside from confirmation in the Senate, we're already seeing the articles, and you'll no matter who wins or loses, you see recriminations on all sides. The Democrats are already saying in the House, well, why did we lose seats? And is this about being progressive? And if President Trump loses, there will be some who say, well, he should have gone more down the path he goes, and some will say, well, do we need to revisit? We go through these cycles every 4 years. Yeah. So the real question is, where do we land? But Jeff, we've managed to consume an entire segment by saying absolutely nothing.
No, I think
so
you
next
got.
week.
Go
next
ahead,
week,
Kev.
Our election 2024 preview.
That's right.
I want to ask one question though. In terms of, in all seriousness, and I know you were being serious in parts of this, but in terms of passage of the Secure 2.0, has that bill been scored? Have we seen scoring? Because I just want to give people an understanding of what the process could look like. So
no, it has not been scored. To me, kind of one of the issues it's going to face is that it may or may not be an issue. Up until last year, it would have been an issue, but in the past 12 months, we've seen kind of this issue go away a little bit. Is that Secure 2.0 has not been scored, and Secure 2.0 is unlikely to be budget neutral. So they're either going to have to just decide to pass Secure 2.0 with it causing deficits, or they're going to have to find pay-fors. And finding pay-fors can be the tricky part for enacting legislation. The nice thing here is it's bipartisan. It looks like we're going to have a split legislature. So, I mean, this could be an area where the two sides are looking for a win. On the other hand, you raise a good point, which is it hasn't been scored, and it may require some gymnastics if people want to start talking deficits again.
Yeah. Well, thanks. Go ahead, Kev. David, I'm sorry.
No, I agree.
Oh, okay.
How was that?
That was a good addition, and I wasn't expecting that.
Well, I'm sorry. In this time of tension, I've been watching comedies. So on TV one day was the Will Ferrell movie Old School, and I thought of the moment where he debates James Carville, and I just heard where James Carville just says, "We agree." So for once, Kevin, you were perfect.
That was great. Well, guys, in all seriousness, hoping for more unity, and it sounds like this Secure 2.0 could be the start of that. I think that's really important after a very, what looks like contentious and traumatic experience for so many. Guys, we're going to leave it there. Thanks so much for joining us on the program. Have a great rest of the weekend, and we'll talk to you again next week.
Thank you, Jeff.
Bye. Well, that wraps up this episode of BRN Sunday. Don't forget, we're back again tomorrow on BRN AM. I'll be joined by Market Watch's Alessandra Melito. She's a retirement reporter, and we'll be focused on the election, what it means for Social Security and retirement in general. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.